All right, welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning in. If you're just tuning in, thank you very much if you stayed with us all day long today. We're having fun and getting it done, all right? So let's take a look at what these markets are doing, because ultimately these markets are your money, and that's the most important thing, not what I say. So let's take a look at corn. What's that corn table got for us today? 13.5 cents higher. Everything's kind of come back. The report came in, took the froth off, and now we're having a little bit of a relief rally just by the fact that we didn't have everything get slammed. 13.25 cents higher in the May. 7.71 is last, 2 cents off the highs there. Let's go out to Dees. Look at that new crop Dees, 7.15 3/4. The high was 7. That's a penny off the high, or 2 cents off the highs, but we're up 6 3/4 cents back there. So that's good without having really turned a wheel. Soybeans, really, we were up about 25, 26. They came back off to say up about 10 to 15, and now we've rallied back up to say 40 higher on the day. So another, I'm going to call this a little bit of a relief rally, so we didn't get slammed. 40.5 higher in that May. That's good. 16.86 even, and that's still 3.5 cents off the highs, folks. How about Nove? 11 cents from 15 bucks. 22 3/4 cents higher. I've been talking about it a lot lately. Not trying to wish it higher, but it's something to look at. The high is 14.90 3/4, so we're close. How about wheat? That's the Chicago wheat table. 29 cents higher, 10.49 even is last. That's about 5 cents off the highs. 26.5 cents really is what we got the back months up. Say March is at 10.37 3/4. So that's another good. A lot of green on the screen. This is a nicer day to have than everything getting slammed, isn't it? 30 cents higher in the hard red wheat in Kansas City. That's the May, and it's up $11.75 of a penny right now. High was 11.05 1/2. Let's go out. The deferreds are still doing well. 25 3/4 cents higher in that March. 10.94 1/4. So a lot of green there. Let's see about spring wheat. Can it continue with it? Yes, it can. 30 1/4 cents higher. 11.29 3/4 is the new high. All right, that's the high. 29.5 cents right behind it. That's what we've tacked on to the July contract to 11.28 3/4. Cotton, well, you asked, we deliver. 66 points lower in the May. That's the front month. That's 132.54, or about 2 cents off the highs. But we do have Dees higher on the day by 83 points to 115.52. All right, let's bring in Todd Horowitz. He's with Bubba Trading. He's in Las Vegas, sitting in front of his art collection. Todd, did you make any money today to buy more art, or is it just kind of one of those days?
Well, I mean, I'm long, so I guess I made a little more. If I sell it, I'll be out. But I think they're going a lot higher, Scott. I think, as you put it so professionally, a potential relief rally, which is what we saw. And look, we've seen many opportunities to sell these markets off, and they have not been able to do so. Each and every time they have brought them down to some support level, they have immediately come back up and rallied and look like they want to make higher highs. I think Novi beans are going well over 15, and this backwardation we're looking at, which means that the front months are much higher, the delivery months, I think is going to start to even itself out, which means the back months, and I think we'll call the important months for the new crop and for whatever, are higher. So I think things look really good.
All right. Well, the only thing you did wrong there is that you said you might have some unrealized gains by being long, and if that's the case, the government will try to tax those before you even realize them. So be careful. All right, we're going to go pay some bills. We'll come back and talk with Todd Horowitz from Bubba Trading after this. Okay, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Maybe I have to remind myself every time. People say, why do you say that every time? I don't know. It's just a habit. But anyway, it's also a cheap segue into the cattle markets. Let's take a look at what live cattle is doing, right? This is quiet. I'm not going to read too much into it. We've been a little bit higher, a little bit lower. So this is a weekend market here. April's off 22 cents, 137.77 is last. We also have a little bit of a rally out in that Dees, I guess. I'll go out there just so we can make ourselves feel a little bit better. Up 15 cents to 148.82. But folks, there's just not a lot going on. I'm not going to make any reasons up on why we're doing that. All right, feeders. How about that? Feeders have to deal with the higher corn board. They're going to kind of give up a little bit, but we still have a gain in the April. That front month's up 32 cents to 156.72. But as you go out the deferreds, it's anywhere between 20 to 85 cents lower. 85 cents lower in that August contract to 173.42. All right, how about lean hogs? Let's see what they're doing here today. We've got a little bit of bear spreading going on, it looks like. April's off 20 cents to 98.85. May's off 52 cents to 107.80. But then we do see a gain in June, July, and August, with August leading the way, up 52 cents at 114.62. All right, let's bring back in Todd Horowitz. He's in Las Vegas. Todd, what do you think about these livestock markets?
I think feeders, listen, April feeders, they don't have to be fed so much, so they can be a little bit higher. But I think that they're going to go the way of crude. I mean, if crude goes much higher, I think cattle's going lower. I think we go into that curve we talk about all the time of, what can a person budget and eat? And I think you're seeing in the back months, you're seeing hogs much higher, and cattle is just kind of flattish. And I think it's really just kind of trading off of crude right now. When crude's a little bit lower, cattle's more affordable. And when crude gets too much higher, it becomes unaffordable. I think they look a little bit weak here, but they are at pretty reasonable prices. But of course, then we have to start weighing all the input costs to either feed them or to maintain them. So there is some issues out here, as you and I know. And
then let's just lay over the fact that we might see 1, 2, 3, or 4 half-point interest rate hikes. I mean, I don't think we'll see 4, but I'm just giving that a little bit of lip service. But I mean, hey, Todd, common sense tells you we got here by low rates and free money. If we take low rates away and free money away, what happens to everything else again, too? So we have to keep that in mind as well, don't you think?
I couldn't agree more. I mean, listen, the Fed is 10 years behind in raising rates. We should not be at the rates that we are at currently. But this is the continue to kick the can down the road and hope that things go away, or in other words, figuring out a way you can borrow your way out of debt, which never works. And we've all seen many people try and fail. So rates are going to have to go up, or crude's got to come down. And the best mix would be a combination of the two, where we could justify and also live comfortably. As long as we're paying less for oil, we could afford to pay higher interest rates. But mortgage rates are over 5% for the first time in 6 years.
We'll see what that happens. There's supply and demand issues there too. I mean, we're going to have lots to talk about. That's all. But I really appreciate your content today. Have a great weekend. Todd Horowitz with Bubba Trading in Las Vegas. We're going to bring it back to Nashville, Tennessee, so I can throw it over to Suzanne.